So what is Macro Insiders? Macro Insiders is a combined research service from Julian Brigden and myself. We both write our own independent research, and it's expensive high-end research. Julian with his MI2 partners and myself with Global Macro Investor. But we decided to team together to create a best of both worlds, I guess.
So we're both very passionate about the space that we operate in macro, but we've always thought that it's underserved for the greater, shall we say, retail and mass market. And we particularly think it's poorly served by some of the traditional news services. They're often very reactive. And yet what we've always discovered, certainly in our career, is that at times of inflection, macro becomes disproportionately important. It can sit there, it can do nothing for an extended period of time, and yet it can be the deciding factor for your return profile at key points. And this is one of the things that we wanted to try and help retail investors, and should we say smaller institutional investors, understand. And that's one of the reasons we launched Macro Insiders.
Yeah, you see, the problem is really why there's a lack of good macro research out there for ordinary investors or the less sophisticated investors, is it's an expensive business. It requires an enormous amount of work to analyze almost everything going on in the world, because macro is every single asset class, everywhere in the world, all at the same time. It requires intense effort, and it takes a lot of on-the-ground research as well.
The other thing is it's traditionally something that's been kept inside the institutions, right? And so there really aren't retail macro-orientated products.
No. So the key thing here is what does Macro Insiders do for you? And I think the most important thing is to understand the importance of macro. And I'll talk a bit about this later. But macro itself is the key driver of asset prices. What happens to the dollar, what happens to interest rates or the business cycle is really the key driver of all the returns that you find in other asset prices and asset markets. So for me, it's the most crucial thing. And it's for us really to help people navigate that, because it's really complicated, ever-moving jigsaw puzzle, a 3D jigsaw puzzle. Yep. And then it's figuring out, okay, where does the risk and reward, where's the opportunity lie, all of that kind of stuff.
Yeah, I think, look, it's very easy. And I think our assumption is that most people are running a relatively balanced portfolio. They're traditionally, most of the time, they're invested. They're not trying to play a sort of short-sighted institutional game where they're long, shorting things, but they're constantly invested in the sort of markets. And where macro comes to be really important are at those key inflection points, because macro definitionally, and I think you were talking about it earlier, there's one data release on ISM once a month, right? So you're not constantly looking at minute by minute, second by second stuff that you can be in some of the other markets. This is a slow moving but highly important cycle. And at those inflection points, the value of macro is definitional, because if you look at a return profile of your average, let's say long only equity portfolio, it makes most of its money in a very small number of days, and it loses most of its money in a very short time.
And also I just feel that we're entering into a extremely prolific macro environment. It just feels that the turning points are coming. We're very late cycle. The Fed are raising interest rates, which tends to signal the end of the cycle. It feels like it's all coming up. And we've had some success during the year with pointing out some of these trades. First, building the framework over the course of last year about where things may go, and then highlighting the trades as and when they come, whether it's shorting emerging markets or buying some other secular themes like India, or whether it is what interest rates are doing, or in particular what the dollar's just done and how that's going to drive everything.
Well, I think, people have got quite short memories. And so we sort of tend to look back and look at, the last couple of years. Really, since the global financial crisis, we've lived in this new world. We've never had, Raoul, a world like the one we live in terms of asset markets. We've never had one that's been so utterly manipulated by central banks, where they have just flooded the global economy with vast quantities of liquidity, inflating every risk asset, while at the same time suppressing bond yields and interest rates and volatility. And now, as they try and walk back from some of that, as they think the economies are recovering, we'll see if that actually pans out as we expect, that normalization process, most people haven't really lived through and don't understand the mechanics of what's driven asset prices.
And it's not necessarily, I find the newsletter world tends to look at this in terms of it's all going to end.
Right.
Well, macro people, we look at, okay, where's the opportunity to invest in this? Where's the opportunity to trade? Where's the long-term opportunity? What do you want to buy at the end of this? What do you want to sell at the end of this? It's kind of seeing the whole big picture, not the world's going to end because it creates headlines. It's no, how do you navigate this world?
Right.
How do you make money out of it? How do you protect yourself? And where the big opportunities lie?
Right.
And I think that's the key to what we're trying to do.
We've both been in these markets for a long time now. And we have seen, while there's no analogy that's always perfect, the cycles and the patterns that you see, as you were saying, whether it's via the dollar, what happens in a late tightening cycle, what happens with emerging markets at the beginning of a new cycle, all of these things and this skill set that we have accumulated over too many years of doing this, plus our partners. I mean, we have 4 other senior partners in MI2 and you have the same in GMI. That weight of experience allows you to try and help set up a roadmap. And while everything never's exactly the same, those patterns and those underlying trends, I think it's where you make all your money. Because if you'd have got out in 07 and you got back in 09, right, that amount of money that you've made there is inordinate. And I think going forward, my personal view is this is going to become a much more, the easy money's been made, right? The surfing this balance sheet expansion of central banks was fantastic. It was inordinate quantities of cash that could be made from that. I know when you listen to CNBC, they're constantly talking about PEs and this stock's better than the other. And they're often very, very right that this stock is better. But the broad market, if you look at the correlation between the Fed's balance sheet expansion and the broad equity market, during bouts of QE 1, 2, and 3, the correlation between the NYSE and the balance sheet was over 90%. So every single ship got lifted by that balance sheet expansion. And now we're no longer in that period. And the easy money's been made and macro's coming back.
And also, I think the other important thing for people to navigate now is there is a world that is more multipolar.
Right.
It's not just driven by one set of economic values, because the rise of China, the rise of India, Russia, a number of other things are making macro analysis more important, and trade tariffs and all things going on now are pure macro. And if you don't understand the linkages between everything and how that all plays out, then you run a whole risk within the portfolio that you really don't understand. So I think, that's what I think we can offer people, and that's what we're really trying hard to do, to give people that kind of depth and breadth of experience